The General Anti-Abuse Rule in the Finance Act 2013 has satisfactorily addressed the illegitimate judicial activism and uncertainty evident in the Ramsey line of cases. Discuss. The General Anti-Abuse Rule in Part 5 of Finance Act 2013. GAAR, as 206-215 and Schedule 43 was constructed to mitigate tax advantages arising from abusive tax arrangements and functions as a dragnet mechanism in instances where purpose of statutory interpretation fails to adequately address the arrangement at hand. The statement asserts that the GAAR has satisfactorily addressed the illegitimate judicial activism and uncertainty evident in the Ramsey line of cases, which stems from the critique of Ramsey v. IRC that Snape has claimed as demonstrating that judges have shown a certain willingness to develop principles as opposed to applying statute law robotically, and contains an anomalous judicial doctrine for combating tax avoidance. In this essay, two limbs are necessitated. Firstly, whether the illegitimate judicial activism and uncertainty is evident, and secondly, if so, a determination as to whether such is satisfactorily addressed by the GAAR, ultimately concluding that the GAAR has provided a measure of clarity to the uncertainty developed through the Ramsey line of case law, thus it should best serve as a stopgap mechanism until stronger reforms can be leveraged. In order to determine whether the GAAR has satisfactorily addressed the illegitimate judicial activism and uncertainty evident in the Ramsey line of cases, the scope and evidence of the uncertainty generated and the risk factors of judicial activism must be denoted. The Ramsey principle sets out a judicial approach to striking down of benefits from tax avoidance by identifying transactions of no business effect, which if identified result in, the inserted steps are to be disregarded for fiscal purposes, leaving the court to consider the final result of this chain of transactions as Lord Reed affirms by his consideration of overall economic outcome of a series of commercially linked transactions. This is facilitated and achieved by the court drawing upon the purposive and contextual construction of the legislation, such requires affording the statutory provision a purpose of construction in order to determine the nature of the transaction to which it was intended to apply, and then determining whether the actual transaction, which might involve considering the overall effect of a number of elements together, answers the statutory description. Thus Lord Brydon holds steps in a transaction may be disregarded if they are inserted merely for tax avoidance purposes. Furness v. Dawson. The present iteration of the Ramsey principle is laid out in the Barclays Mercantile Business Finance Limited (BMBF) v. Mawson, which affirms that Ramsey has no independent substance. It is merely a restatement of the principles of legislative interpretation viewed through a purposive lens, redefined by Lord Nichols into a two-step test. First, obviously, unambiguous legislation should be given its natural meaning. Second, ambiguous legislation should be interpreted so as to give effect to its purpose, as divined from the text and scheme of the legislation. However, this has done little to assuage concerns of uncertainty. Snape observes that the continued usage of Ramsey principle-based reasoning serves to anomalously affirm the constitutional exception to parliamentary control of taxation, from which judges have shown a certain willingness to develop principles as opposed to applying statute law robotically. This risks creation of uncertainty, given that the true meaning of the case remains highly contested, despite attempts in BMBF to heal the matter. There remains a significant degree of concern around affirming what is readily interpreted as an anomalous judicial doctrine for combating tax avoidance. In consideration of accusations of illegitimate judicial activism, the Ramsey principle cases present critical issues which have spurred uncertainty. Firstly, Aronson has warned that in their usage of purposive approach, the courts are faced with the temptation to stretch the interpretation so far as possible to achieve a sensible result, though this has countered in Mays with the observation that in consideration of the role of the courts, their sole function is to decide the case on their best understanding of the relevant transactions and the applicable law, whatever they may be. Whether or not the courts approve of the outcome is beside the point, which seemingly reaffirms a strict reading of case facts to limit the threat of strained purposive interpretation being utilized to justify a judicially preordained outcome. From a theoretical standpoint, Lord Diplock has recognized that the capacity in tax-based cases for the courts to effectively act as legislators in undefined areas of revenue law risks the threat of judicial activism as post-Ramsey, whenever the court decides that kind of dispute it legislates about taxation, which thus erodes the maxim that people should be able to arrange their affairs with knowledge of what their resulting liability to tax will be, given the willingness of the courts to self-impose new forms of tax liability where, taking Dawkins' positions regarding the role of the judiciary, the judges in Ramsey effectively legislated new legal rights, and then applied them retrospectively to the case at hand. However, this assertion of judicial activism must be tempered against the alternate reading of the Ramsey case lineage. That the creation of the principle falls within legitimate judicial discretion and capacity, the courts merely determining whether the transaction is one which Parliament has said shall be taxable. Having established de minimis that the Ramsey principle line of cases has contributed to uncertainty and relies upon judicial activism, but worse, the second phase of assessment is to determine whether the deployment of the GAAR assuages this matter successfully. The GAAR can readily be applied to Lord Reed's concerns regarding the inability of all counsel to explain the rationale of the tax exemption within the case at hand, in UBS. This is achieved through the usage of wide test for what constitutes tax arrangement, with an additional requirement of it being abusive, through the satisfaction double reasonableness criterion. The double reasonableness test holds that if the arrangements entered into cannot reasonably be regarded as a reasonable course of action in relation to the relevant tax provisions, having regard to all the circumstances, they're satisfied and the GAAR is employed. This thus holds great utility as it avoids the concerns faced by interpreting statutory positions in light of purposive interpretation which had been the bane of Ramsey-based approaches. Friedman has further raised that double reasonableness eliminates the risk of creative compliance as formalism breeds creative compliance. By relying solely upon Ramsey reasoning, there exists a risk that a novel scenario, as was potential identified in wired orthodontics, either avoids tax scrutiny or necessitates the usage of strained semantic interpretation to the detriment of clarity, which the GAAR avoids. However, The extent to which the problem of Ramsey-style tax arrangements are better addressed by the GAAR is limited due to structural concerns. Given the GAAR's extra statutory location, it may be deemed at best a solution of last resort. Simply inserting the GAAR into every unclear transaction or utilizing it as a catch-all against tax avoidance will not remedy the underlying complexity or incoherency of the complex system under which it is papering the cracks. This concern is best recognized by Malcolm Gami, who contends that the GAAR reflects the failure of current policy and legislation, and in particular the failure to think more carefully about the nature of the tax base, and to articulate it correctly with greater principle, clarity, and purpose. This issue of articulation is of exceptional concern given that addressing the issue of tax avoidance by extra statutory means via the GAAR undermines the principle of clarity within the tax system, as the taxpayer can no longer rely upon the statutes to inform the decisions and guide their behavior. Eroding clarity with the blanket approach of the GAAR risks negating previously successful, precise and targeted anti-avoidance provisions to the detriment of the taxpayer and to the burden of HMRC. Despite this shortcoming, the GAAR may yet be held to assuage the issues presented by Ramsey. Friedman has counterpointed that lack of certainty is not a defect, since certainty is not the aim of the exercise. The lack of certainty has allowed the GAAR to address novel scenarios without the need for judicial stretching of semantics. SUD thus allows the courts to simply raise that the scheme is against the spirit of the GAAR rather than requiring the judicial stretching of the statutes to address shortcomings, and thus avoids the accusations, judicial activism. This is satisfactory, as Lord Diplock has noted. Anyone who has decided tax appeals knows that most of them concern transactions which members of Parliament and the draftsmen of the Act had not anticipated, about which they had never thought at all, in novel cases and instances of creative compliance. As noted prior with reference to Friedman's supporting view, existing parliamentary legislation is frequently found ill-equipped to address nuanced cases, hence the flexibility of the GAAR is employed successfully and will mitigate the risk of perceived judicial activism through the usage of strained purposive approaches. Thus forth, it may be determined that the GAAR has satisfactorily addressed some elements of critique levied against uncertainty, provided from the Ramsey case series, by negating the risk for judges using purposive interpretation to yield to the temptation to stretch the interpretation so far as possible, to achieve a sensible result, that Aronson has highlighted, which thus erodes the risk of perceived judicial activism. However, the extent to which the GAAR can be deemed to satisfactorily address all issues stemming from the Ramsey principle cases is limited. This is due to the GAAR itself possessing structural flaws, as highlighted by Gami. As such, the risk remains of potential illegitimate judicial activism and uncertainty until a more conclusive measure is adopted, either by reforming the GAAR to supersede and replace present statutory anti-avoidance measures, or by reforming the statutory avoidance interpretation guidance so as to limit the temptation for malign judicial stretching.